Right, hello and welcome to another Paper Hands Capital project breakdown. We're looking at Hero, a Solana project today. So it's, disclaimer first, I don't actually own any Hero tokens. I'm not telling you to own any Hero tokens. This is just explaining what the protocol actually is. So it's a derivatives network marketplace for Solana, providing options, perpetuals, and pari-mutuals, which I haven't seen anyone else do yet. The governance token is the HXRO token, when it has a vote escrow sort of model to it. So the problems that it's trying to fix are the high transaction fees prohibiting trading. So obviously, if you're trying to do lots of small trades, being on ETH mainnet, obviously, not going to work too well. The transaction cost is being way too high. So most things have been going to layer 2s, Arbitrum and things like that. With this project's chosen to go to Solana instead. So it's highly data intensive for quoting so many options at the same time. So this has these Oracle type network actors that sort of alleviate this. The problem of putting order blocks on chain, which we have actually seen in a couple of other things recently. Some things popping up on Atom and stuff like that, KJU, I think it's called. So they are coming along, DYDX, I think order blocks as well. And market makers managing liquidity while maintaining competitive fees for maker and taker trades. So they're not taking on too much risk of losing liquidity while being able to provide traders incentive to actually come and use the platform without being overly priced. So Dexterity is all the smart contracts that build the network itself. So it's based on Serum, which is the Dex on Solana. I think it's made by the Solana team themselves. I think maybe not too sure to be honest, but it was one of the first projects on Solana, I'm pretty sure. So it's building upon that sort of thing, and it's modularized the whole thing. So it's separating all the different components so that other, market types can be built on top of the protocol. So there's not just, they're not just building an options derivative or just building this. They've got all the building blocks, all the Legos there ready to go so that they can build any type of perpetual or exotic option that they want to. So yeah, all these different types of logic are all their own little Legos. Theo, so this is the liquidity provider for the project. So it's an automated market maker that provides the two-sided quotes for the options in the network on the order book. So users can add liquidity to these and earn parts of the trading fees. We'll go later on and have a look at the breakdown of all the trading fees. But yes, and it's incentivized. Sometimes it'll be incentivized by Hero tokens and things like that. That's yet to be sort of really fleshed out. How heavily incentivized and all that sort of thing they'll be. So Theo is hedged. The delta is hedged so that the LPs don't incur too much, or if any, hopefully, impermanent loss. So when the protocol takes on risk, it hedges that by buying spot or futures equivalent enough to hedge that delta. So pari-mutual, this is one thing I hadn't seen anyone else do yet. There might be someone else out there doing it, I'm not too sure. So it's a wagering system where there's an in the money or an out of the money outcome. So I'm pretty sure this started on betting for horses. So you're either betting on the horse that wins, if it either wins or it doesn't, sort of thing. It's not, you're not trying to hit a specific target, or you're not taking profit on some long on Bitcoin whenever you feel like it, sort of thing. You either have hit the target or you haven't hit the target. So everyone who wants to participate bets up or down on the market, and then all that capital's pooled. The platform will take their market maker fee, and then all the people who are out of the money pay the people who are in the money. So pro rata, for how much you put in, you get that share back. So this is one thing that I thought about It could be incredibly degenerate of people. This could be one of those things where you could bet on minute by minute candles of up and down, or green or red candles, and it's not investing at all really, but it's definitely a betting casino type thing that I can see people getting into big time. And that actually, if you go to their beta at the moment, the pari-mutuels is up, and they actually have that on there already, which I was pretty amazed to see. So there's you can already do that with just paper funds. You connect a Phantom wallet, and then they'll give you free imaginary tokens, and you can do that sort of thing. So I think you have to whitelist your address first, though, your wallet address. So the SAM, the smart AMM of the pari-mutuel system, is like a Uniswap pool with probability guided liquidity, as they say. So it's not a 50-50 pool. Is very rarely, if you're betting on something like a sports game, it's almost never a 50-50 chance of any team winning. So because of that reason, if you had a 50-50 pool, it's going to be drained asymmetrically if people come in knowing, they've got a good idea, they follow these teams, and they've got a pretty good idea of whose odds are going to come up, and they keep betting on that team, then obviously the pool's going to get drained, and the LPs are going to suffer from permanent loss. So there's the pool's weighted differently to avoid that. So the fees on launch, it'll be 0.05% for maker trades and 0% for taker trades. This is for the options, perpetuals, and everything. Everything will be paid in USDC at the moment. They have multi-currency plans in the future. I don't know what they're planning on adding. And the pari-mutuels have quite a bit more substantial fee on it, but I think that is to hedge, because it's more of a coin flip sort of market. So I think whereas with perps, most people lose money, whereas in this type of market, I think it's probably a bit easier to for the house to lose. So I think that's why they've got a bit of a bigger fee on it. But if you pay in the native HXRO token, then you cut those fees in half. So there's market participants who are earning these protocol revenues, LPs, SPs, and the governance stakers. So the surface providers are those oracles that I was talking about earlier, who give the quotes to the AMM to ease that data intensity that we said at the start. So the hero token stakers have voting rights. So this is the VE sort of model, and they get a ridiculous 50% share of all protocol fees. So something like GMX has a similar model, but they're getting 30% of the protocol fees at the moment. So this is the breakdown here of the whole thing. The insurance fund, so there's 25% of it is going to the platform. I'm actually not sure how much the GMX platform itself gets, but 25% of all fees, it seems reasonable. It doesn't seem like a whole lot of 6.25% for these Oracle sorts and the smart AMM providers. Doesn't seem like a huge reward, but I mean, when there's enough velocity on the protocol, then I mean, it still could be a lot of money. So yeah, this Photoscript model, if you're familiar with any curve or frax models, you'll know exactly what it is. But yeah, the longer you lock your tokens, the higher stake weight multiplier you get. So if you lock your one token, like on Curve, you lock one token for 1 year, you're only getting 25% of the benefit of that token. So it's not exactly that, but similar. This is a bit of a breakdown that they've got in there on their docs. So volume incentive rewards. So when they start when the protocol launches to incentivize people to come and actually trade on the platform, they're going to vest tokens volume weighted to, so whatever volume you create on the protocol, you get a share in these hero token rewards. So they're going to be, the thing is they're going to be, this is the GMX thing that they've borrowed. Again, you might have been familiar with it. So the rewards are locked on arrival. So you're getting vote escrowed hero tokens. You're not just getting rewards that you can sell off straight away. So if you want to say you get 1,000 hero in rewards, as I've got here, you claim them, and then it will take a full year for those tokens to vest to your wallet, and so you'll get 2.7 a day. And while they're vesting, you're not getting any more rewards on top. So it is definitely one of those models that's trying to align rewards with long-term perspectives, or long-term attitudes to the protocol. They're not just trying to create some farm and dump thing. It does seem like a long vesting period. I'm sure if there was a vesting period of half that, even less, it would deter that sort of activity. So I'm not sure, but I mean, GMX is incredibly successful, so maybe that's not a problem at all. And if the protocol's worth it, people wait around. So this is the emissions chart of all those incentives. So it'll start in epics where it's not time based; it's actually by volume. So every epic, the rewards are cut almost exponentially. It looks like up to a 1 trillion in volume, and that's when the incentives stop. So of the first epic, 400,000 hero tokens are going to be emitted to whoever comes to the platform and trades. That's a lot of tokens very quickly. So yeah, it's probably good to get in early. For the rest of the tokenomics, this is me talking to, I think he's the founder of the Hero platform. So there's a lot about tokenomics that haven't been released yet. Things like how much the devs are getting and whether they have to lock them or whether they're not, when they're vested, all those sort of things. So I'm still waiting back to figure out, to hear more about that. So yeah, in terms of on the Solana ecosystem, there's only two other derivatives markets that I've seen that are operational. One didn't even seem like it had a token, so it wasn't sort of that same value accrual narrative. And the other one was, I think it was just very limited in what it offered compared to this, which seems to have an insanely broad market fit sort of. They're offering everything, every type of option and exotic option, perpetual that everyone else is, but they're also got these pari-mutual markets, which I haven't seen before. So they've definitely got room to grow in that ecosystem and overall. So Solana is definitely not loved by a lot of people. It has picked up a lot because of NFTs, but most people are familiar with ETH, and that's what they do. This is, I mean, if you're operating the whole thing in USDC, you're not. It's not like you have to hold Solana and then bet up or down on Solana. They'll have Bitcoin markets and whatever else. So the having to bet on Solana is not really a deterrent. It's just the familiarity with it. So I've never used any Solana application, so I've just haven't ventured there at all. And there's going to be a lot of people like that. So that's just one little obstacle to get over. Whereas something like GMX, or Dopex or anything else, you've already got your MetaMask and you already know what you're doing, sort of thing. So it makes it a little bit easier. And lastly, smart contract risk. So it seems like there's a lot going on. A lot of oracles, a lot of these different pool weightings. It seems like there's a lot to go wrong. I can't obviously make any accusation. I'm not a developer. I don't know what type of contracts are difficult to make and what aren't, and what are susceptible to attacks and what aren't. It's just one of those things that you have to accept with any project, that there's smart contract risk, and this seems like there's a lot of moving parts. So it's one of those things that, just keep in mind, really. So the token itself is actually on Ethereum and Solana at the moment. They launched on Ethereum first, I believe, and then you can bridge via wormhole to Solana mainnet to actually operate on the system. I think they just launched it here first to get the token into people's hands. I'm not actually 100% sure. So it's pretty much bottomed out. It's 13% up from the bottom at the moment. So it's everything else well, a lot of other things at the moment have seen a bit of a bounce. A lot of smaller caps, under it's 90 million at the moment, so a lot of the small caps like this have bounced, 200% or over 100%. So they're still not a discount considering the market conditions at the moment. But this is still very early days. I mean, it's only been around for 200 days, so still quite early. The market is still in sort of closed beta and DevNet and that sort of thing. So you are sort of betting on a long-term time horizon here. I'm pretty sure the staking contract and all that opens up soon, and I wouldn't be staking personally for. I'm considering buying the token, but staking, I'd have to see the network effect pick up before locking anything for 3 years for sure. It does not make any sense to do that in my books. I don't think there's anything else really to say. So yeah, we're just watching. I mean, we don't even know where it's going to bottom out, but there's obviously no resistance anywhere down here. So watching this level of, anything under 20 cents is getting close to that bottom. Are you saying under 17 cents, and it could go to 4 cents, who knows? Something to watch. So yeah, got my eye on that. Alrighty, anyway, take care.